Dear student, I welcome you to the session of grade 11. I hope you are going to have good time with me. My name is Dr K Masia. I'm a senior lecturer at UNISA in the College of Accounting Science. Then today we are going to cover income statement. I will go to try to show you how to answer the question on income statement to the best of your ability. However, one thing that I've learned in your study, especially for grade 11, they are also testing you a number of things. Even though income statement is an accounting issue, but accounting, because it's a number crunching, then they also test you the issue of critical thinking. Therefore, you ought to think in terms of saying how to do the calculation, because there's a mathematical issues that you need to cover in your answering accounting question. Okay, but I'm just going to project the question paper that I'm going to go through with you today, so that you can able to maximize the marks will come the exam should the income statement be there. But the main issue here is the knowledge. Okay, then let me now project the question so that you can see how best to answer the question. Okay, as you can see now, how it was a cluster task which I got, which has to do with the project that was provided for grade 11, that was in 2023. Then you can see the question was marks was 50 marks, and then the time that you need to spend trying to answer the question was for 60 minutes. Now, I'm going to try to do this question in 30 minutes so that I can show you the main issue that you need to consider when you're answering this question. Okay. Now, they said you need to read the following instruction carefully and follow them precisely, and then answer all the question. Okay. And the working must be shown in order to achieve part marks. It's very important that you show the working so that you can show the examiner how you determine the marks, because accounting is a principal subject. You can get it wrong, but if you apply the principle, they will still go to mark you. Now it says, where applicable, show all the workings to a decimal point. Write neatly, and then, because it's very important that when you write, the examiner must able to see, or whoever is going to mark your script must able to see how did you, your handwriting matters, so that somebody else can able to see. Okay, as I said earlier, this is a 50-mark question. You need to spend at least 60 minutes and trying to answer this question. Okay, now we'll start with the information that is provided, but I want you to note that what we are doing here, as you can see, the required is prepare the income statement for the year ended 30 June. Now, the question is about income statement. There's certain information that you are going to be provided which won't be necessary to answer your required. Like, what do I mean? Like they're saying this, but there's a balance sheet section here. Then you know that the balance sheet section, I need to answer only income statement item. It means I need to go to the section which will able to assist me in answering the nominal section. That's where you're going to answer the income statement. But there are certain things that are in the balance sheet that is going to have the effect in your income statement. What do I mean by that? As you can see, we've got the vehicle, we've got equipment, and then there's a depreciation. Now, even though it's an accumulated depreciation, we know that's the balance sheet section, but the depreciation that you calculate in a periodic, like for the year, it needs to come where? It needs also to be accounted for in your income statement. Okay. Now, we also know that certain things like trading stock here, I need to determine my cost of sales, how do I determine the cost of sales? You said the opening, trading stock plus the purchases minus the closing. Then I know that there's an adjustment that I need to make, because whatever becomes the closing stock, you deem it to be an income in the income statement, because you are saying you are going to utilize the whole of this trading stock for the year, but whatever is on hand, then you need to add it back, because you already get a deduction when you buy the stock. Okay, now That is very important in answering a question. There's certain things like provision of bad debts here. This is a balance sheet item. Then obviously there's going to be some provision that I need to make for the year before I account it in a balance sheet. Means there was a journal entry that I've accounted. There's a debit and credit. As you know, that account is about debit and credit. The debit can hit the income statement item. Therefore, the credit, which is the provision, will now be shown in a balance sheet item. Then there's certain things that you need to consider to say they can have an effect in your income statement depending on the information that you've been provided. Okay, now let's start. Remember, the question again is to prepare the income statement. Okay, now the income statement, as we know, that you need to understand the format. The format of answering the income statement, they're going to say sales minus cost of sales is equals to gross profit. Okay, now what am I given here? I'm given the sales of 6,250,000, but I've been told that cost of sales is what? Is question mark. It means it's unknown. Therefore, you need to say, how am I going to determine the cost of sales? Consider that as unknown. It means you are going to be provided enough information for you to determine this cost of sales. But for now, let's start with first thing first. First thing first, because I'm doing the income statement, I need to determine how do I calculate this sales. Okay. Now I'm given in the trial balance that the sales now is 6,250, which is good enough because this is a pre-adjustment, and you can see it's a pre-adjustment. The word pre, it means there's some adjustment that have been provided, which is not yet whatever information is here, they didn't take into account all the pre-adjustment. Okay, it means already by this statement that's a pre-adjustment. It means I'm given another information which has to do with adjustment, which I need to consider. But I'm given the sales, which is 6,250,000. But let's now go and see if there's any adjustment that I need to make on sales. Okay. But your starting point is 6,250,000. Then you need to consider other calculation. Now, number one, in terms of adjustment, as I've been given only the pre-adjustment trial balance, now you are given a credit sale of 27,000. Markup is 60% on 29 June to a debtor called R. Sabah. Has not yet been recorded. Now I know that the sales that is provided there, they said there was this credit sales, and the markup of all the credit sales, even though they didn't tell you that is the markup for all credit sales, you know that the markup is 60%. Then it cannot be correct to say it's only pertaining to this RSAB. It's how they determine the markup as a company. Then it's very important for exam technique. Even though they're not telling you that, then you need to say the assumption is the fact that it's 60%. Markup. It means for every sale they make here in this company, therefore they charge extra 60%. It means it's a cost plus 60% to determine my sales. Okay, now what do you do now? Now I know that the 27,000 of a credit sales is not yet accounted for. Then what do? I'm going to say my sales, which is 6,250,000, plus the total sale of this art server, which is not yet been recorded, which is 27,000. You need to add it there. But now remember, your cost of sales, you have given it as a question mark. But I've already now been told that the markup is now 60%. Therefore, what am I going to do now? I'm going to say to determine whatever the amount that I'm going to determine for sales is now 100 plus 60%. That's how they determine the sales. Therefore, but I want the cost. And the cost, we know that it's 100%. Then it's going to be easy. What you do, you're going to say, whatever you determine as the sales, multiply by 100 over 160, so that you can go to 100%. Then it's easy. The minute I know what my sales be, then it's going to be easy to know what is going to be my cost of sales. Now I'm happy with 27,000 that I'm going to adjust. It means I'm going to say 6,250 plus 27,000. Okay, now let me also see where else will I do an adjustment. Okay, now you are also be provided trading stock. I know that is not going to affect my sales. Then I want to see where else will I do my adjustment. Okay, we know that if I'm given the debtors allowance, I need to make an adjustment. Then let's see, because debtors allowance, it means is all the the sales that maybe the customer might have returned, then it means I've made a sales, but somehow they've returned it. Then if they've returned, therefore I need to make adjustment. That becomes my debtors allowance. Okay. Now I want to see if I'm given any information that has to do with debtors allowance. Okay. Now it could be in a trial balance. Let's go to the trial balance and see if there's any debtors allowance that I need to make adjustment. Okay. Now there it is. You're given 20,000 debtors allowance. Then I know that is an counter revenue. Then you need to take it out of revenue. It means now the sales is easy to calculate. I'm given 27,000. I'm given my debtors allowance. What am I going to do? I'm going to say my sales of 6,250,000 plus 27,000 minus this debtors allowance of 20,000. Then that gives you the sales. Okay. Then now, after you determine that, you said, whatever the amount that I determined, then I'm going to say, I can now calculate my cost of sales. Can you see? It's a mathematical issue because now you have been told that 60% is a markup. Then how do I calculate my cost of sales? I'm going to take my sales, multiply by 100, divide by 160. Therefore, it's going to give you what? It's going to give you a cost of sales. Then you can see, as doing the sales, automatically you are answering also cost of sales. Okay. Now, I just wanted to show you in my calculation how I've calculated that, so that it can be easy for you when you do a question. Now, you can see for my allowance for debtors control, the one I'm going to say debit my debtors control of 27, credit my sales. Then I'm saying I'm going to add that 27,000, which was not recorded in my sales. But don't forget that in accounting, when you're doing a journal, even though the question is asking journal, always think debit and credit when you do accounting question. Okay. But I'm not, the question is not asking me the balance sheet, it's asking me income statement, but I'm interested in this other leg, which is sales. Okay. And then also, don't forget the cost of sales. Now, I've been told that the markup is 60%. Therefore, it means the cost, my trading stock or my cost of sales, I know that when I bought that I sold it for 27,000, I spent 16,865. How do I do that? Because I'm told that my markup is 60%. Therefore, to go back to a cost is 27,000 multiplied by 100 over 160. The other easy way to calculate, you just say 27,000 divided by 1,6. 1,6 is 1 is 100% plus also 60%. But then now, to easy calculation, you can do that, or you can say 27,000 multiplied by 100 over 60. Therefore, that hence when I'm doing my revenue, because I already know what is my revenue or my sales, how did I determine my sales? That amount plus 27,000 of data that is not yet accounted for, which is the credit sales, minus the debtors allowance. Then what am I going to do to determine the cost of sales? I'm going to take the 6,257,000 that I just now calculate, divide by 1,6, or that multiplied by 100 over 160. Then you are going to get your 3,910,625. That is going to be my cost of sales. Then that becomes easy on how to calculate. But what I said earlier, you are answering sales at the same time you are also answering cost of, because the minute I know what my sales is going to be, then the unknown, which is cost of sales, is easy to calculate. Okay. Now let's move on. Then we are done. We are now know what is my cost, my income statement, my gross profit will be, because my gross profit will be that 6,257,000 minus the cost of sales, which is 3,910,625. Then I know now I've determined my gross profit. Okay. Now I just wanted to show you in terms of how you would have answered that. So that you can see your sales, you can see, and therefore my gross profit, that is the gross profit. Okay. Now let's move on to other operating income. Okay. Now we go back to the scenario. You see in your scenario, what are you being provided with to determine your operating income? Okay. Operating income is things like rental income, any income that you derive as a result of you operating the business. Okay. Then you look at the information provided. You have got commission income, is going to be included there. And you also have other income, any income that is there that you might have made as a result of operating your business, okay, other than sales. Okay, now let's see from the information provided, especially on your adjustment. Okay, now I've been told that trading stock, as I said, is going to be part of trading. We're going to deal with that. I'm looking for anything that has to do with other operating income. Okay, now if you go to note number 9, they're saying rental income was increased by 1,500 per month from 1 November 2020. The tenant has not paid for the rent for February. Okay, this is very tricky, but remember, it's not that tricky. It's a question of reading information to understand what am I going to do. Now, if you go to the rental income here, which is provided, let's see what was the rental. We've got commission, we've got interest, we've got rental. Now, remember I said all the income other than sales, because I've already accounted for sales. Now, the rental income is 169,500. But the information that is provided is to say the rental was increased from November by 1.5, but there was a rental for the month of February which is not yet been paid. And then now what do I do with that information? I need to say my 1.5 of rental income that increased by from November, December, Jan for 3 months. Then I'm going to say 1.5 multiplied by 3 months is going to be 4,500. Okay. Then I just said for the rental income that it's been provided, let me show you in my wiki so that you can understand. I'm saying it's from November, and we've got December, we've got January, which is 3 months. Therefore, we're saying the amount that is 169,500, which is provided here, already include this increase of 1.5. This 169,500. But now the month for February, which include also the increase of 1.5, is not yet been accounted for in this 169,500. But I need to include it. The question is, how am I going to determine that amount for February to be increased here on this 169,500? Then what I do, I said, okay, the increase is only happened for 3 months. It's going to be for November, December, January, which is 4. Then I must go and take it out first here. And I divide by the month, because whatever I'm provided here is for 11 months. But included in that is only 1.5, which is the increase of 3 months. Then I want to take it out. Then what I do, I said that 4.5 minus the 169,500 divide by 11 months. Then I know that I've got the amount, but before the 1.5. Then I add 1.5 after I determine that, because whatever the month of February I'm looking for the amount with an increase of 1.5. But I first remove the effect of increase of 1.5. Okay, now let me show you on my workings here so that you can understand how to calculate. Okay, I just want to show you how would you have calculated this. Okay, then I'm going to say so that you can now understand. You can see step 1, I'm going to say the increase for 3 months, it was 1.5 multiplied by 3, which is 4.5. But then you subtract the increase from the rental, which is now going to be 169,500 minus 4.5, which is that 165,000. Then this represents the amount earned over the period before the increase was factored in. Then what do I do now? I divide by the 11 months to get the original rental before the increase, using the old rate, which is now 15,000 per month. But for the month of February, we have been told that it's not yet accounted for. But this 15,000 is before the increase. Therefore, I'm going to say 15,000 plus how much? Plus 1.5, which is going to be now 16,500. That's how I'm going to adjust. Therefore, I'm going to say this 15,000 plus 1.5 is 16.5. Then to determine my rental, now I'm going to say whatever is being provided in my trial balance plus 16,500. I hope that's now you understand that they are not only testing you, only number crunching. You also need to do a little bit of thinking, which is a critical thinking, or the reverse psychology. They are testing you to say, can you try to think, how are you going to determine the rental, even though for the month of February? But now, considering that the increase only happened from November until January and also January, but even the month of February there was an increase of 1.5. Then first take out the effect of increase, so that now you calculate the amount before the increase, and when you calculate that amount, then you also plus the 1.5 of an increase. Okay, that's how you are supposed to do the calculation of rental income. Okay, now let's move on to the next thing that they've asked here in the question. Okay, now as you can see, let's go to the solution so that you can understand. Now you can see they give you more marks of calculating that 16,500. That one, it was provided, and therefore you ought to calculate that 16,500. You can see more marks was provided on the 16,500. Okay, remember there was commission income of 40 which was provided. There's no marks because the amount was provided. And also the other thing is because in your solution or in your Excel, that I didn't show you the Excel spreadsheet, the amount was already been provided. There was no marks provided. Okay. Now, other income could be things like bad debts recovered, as provision for bad debts and profit. But let's now calculate the bad debts recovered. Because remember, if you have got any debt that you write off in the previous year, later on, remember when you write off the debt, you're saying, I'm not going to expect any income because I'm writing it off because this person or this debtor won't be able to pay me. But it might happen that later on the person come back and pay. But the adjustment information will be able to assist us if ever there's anything to calculate. Now, let's go to the additional information and see what was provided with regards to bad debts. Okay. Now, I've been told here that note number 5, on 30 June, 5,600 was received from people. Remember, the year end is 30 June 2021. Okay, on the last day of the year end, which is 30 June, this person, which is called P Powers, you receive an amount of 5,600 whose account was previously written off. This amount was entered in the debtors control account in the cash journal. Now I'm happy that I've been told that there's a recovered amount of 5,600, which now it was written, it was an expense in the previous years, but now I'm told that somehow this person managed to come back and pay 5,600. Therefore, I need to show this 5,600 as an income. Okay, hence you can see when the answer here, they said bad debts recovered of 5,600, then it's also an income. Okay, now I'm also have provision of bad debts that I need to do adjustment. Then let's go to the information so that you can see what was provided for you to calculate that. Now, in the trial balance, because everything is started in the trial balance, what is provided in the trial balance? There's a provision. Remember, I said time provision is a balanced item, but remember, because of debit and credit, if there's any adjustment, it's first going to hit. It might also affect your income statement. Okay, there was a provision of 10,000. But now let's see additional information. What is additional information? Whether there's any effect that is going to have in the income statement. Because remember, you do a provision every year. Now they say the provision of bad debts, note number 6, the provision of bad debts must be adjusted to 5% of outstanding debt. Remember, I'm given the amount as 10,000, which is that. But the question is, I need to say, what will be my debtors book, my debtors book or my debtors balance be as at 30 June 20? Because on that amount, I need to say multiply by 5%. Then I want to see whether my 10,000 was calculated based on that now. which is very important. Okay, now let me show you in my calculation, because I'm given debtors book which was on the balance sheet. You can see if you come to your debtors book, debtors control account started with 72,000. But am I given additional information to make any calculation? Say what? Remember, they said your provision is based on 5%, and then it means I need to say 5% of that. But I cannot calculate on 72,000. I need to first see if there's any adjustment I need to make on my debtors book now. Okay, you go to the additional information. It says here, there was a debtor which is called Armnisi, was declared insolvent. His estate paid 60 cents in the rent of 900 and was received and recorded. Write off the rest as bad debts. But now you only received 900. What was the total debtors control? It means I need to say that 900 represents the 60 cents, but I need to go to the full 100% before because the only amount that I will get, so that I can write it off. Okay, now you can just say 900, which is represent 60%, or divide by 60 cents, then you go to 100% if you do that. Then now let me show you. And also don't forget, there was a debtor which they said here has not yet been recorded. It means the first thing I need to say, my 72,000 is a pre-adjustment amount. I need to first add 27,000 because whatever the amount I'm going to determine, they said I must multiply by 5% to determine my provision. Then I need to compare the provision that I've calculated based on adjustment and the one that is provided, and to see if there's any adjustment I need to make on my provision. Hence, remember, the accounting is about debit and credit. Okay, now you have 72,000, and now you also have your 27,000 that I still have to consider, that I need to add to the tax control. And I also been told that Munisi, there was also 60 cents that you are only going to recover. The rest you are not going to recover. Then I need to also to consider that. Then as hence you can see, let me go to my calculation so that you can see how I calculate this. You can go, as you can see, I said now, I've been told that 72,000 is provided from the trial balance, and 27,000 is the amount that was now is not yet recorded. Then I need to record it. There was also the 600, which was to say the amount that you are going to recover is also 600 of your debtors control, because whatever been provided for, they said the estate can only pay you only 60 cents, which is now that 600 cents which is provided there. But then how did I determine remember they only get 900, but the total you are supposed to say 900 multiplied by divide by 60 cents, then it gives you 1,500. From there you say 1.5 minus 900. That's how I get my 600. Okay, now you also said the 5,600 is that amount that was also I've been told the amount which is bad debt recovered. Remember, there was 5,600 where you were told in the question that somehow the debtor managed to remember write it off, but now you come back and pay. Then I need to make adjustment. Then my total debt book becomes now 104,000. Then I calculate 5%, which is 5.2. I compare. I said, but I'm provided 10 million. But then now the amount of provision was supposed to be only 5.2. Therefore, I need to go and make adjustment of how much? 4.8. Then the 4.8 become adjustment as an income, because I need to reduce from 10,000 my provision, and then to what? To 5.2. Therefore, the difference of 4.8, so that it's now going to be added. How I'm going to do? I'm going to debit my provision of bad debts, which is in a balance sheet, and then I credit my income, which is now 4.8, to reduce from 10,000 to reduce 10,000 to 5,200. Remember, accounting is about debit and credit. My journal entry will be debit your provision to reduce it from 10,000 to 5,200, so that you can determine your 4,800. I hope you understand that accounting is about debit and credit. Okay, Now, hence now I say the additional income will be now that 4,800. The original debt here, as I said earlier, remember they paid only 900. Therefore, I'm going to say 900 whatever, and then divide by 60 cents. We are going to get to 1.5, the one that I was showing you on the debt. Therefore, the bad debt now is 600. That's my calculation of adjusting that 600. Okay, must be returned off against what? Against your data. Hence, now you get 104 to determine your, which you use to determine your 5% of provision. Guys, one thing that I can tell you is you need to understand debit and credit, because like I said, in your provision, you have been provided with 10,000, but now when you do this question, you've been told that only 5% of your debtors book. Therefore, after considering all the adjustments that were not yet accounted for, now I've got the new debt book, which is the new debtors balance. Then I use that debtors balance, multiplied by 5%. I said, I want this 10,000 to be 5.2. But how do I do my journal entry? I debit my provision of bad debt, and then I credit other income, which is going to hit my income statement. Okay, it's very important to understand that. Then, when you go to the solution, you will see. Let's go to the solution. Then, therefore, you can see that 4,800 is an adjustment. That is adjusting my provision of bad debt so that it can become 5.2. I hope it is so you find it very easy to do the calculation now, but you need to understand that the question here is about debit and credit. Okay. Now, the other thing that you need to consider, there was also salaries and wages. Okay. Now, let's go to the trial balance and see what was provided with regard to salaries. Okay. Remember, they are all expenses. We started with sales, and then we minus the cost of sales, determine the gross profit. Now we also consider other income. Okay. Now we are going to the expense side. Then I'm given the salaries and wages of 480,000. But let's see if there's any adjustment, because what is important here is you are going to start with salaries of 5. You also start with provided. You get a mark of considering the 480, but you also need to say, was I provided any adjustment with regard to salaries now? Okay, let's go to salaries and we'll see whether there's any issue that I need to consider. Now, with the employee, okay, here I've been told that the employee was omitted and has not yet been paid, and these details are as follows. That means whatever the salary that is there, it didn't take into account this because it was omitted. Remember, it's all the salaries, including what? Including the employer's contribution, because employer contribution is also a salary. Even though they are contributing for a pension fund, it also need to be not net salary. You need to consider the whole salary, including also the employer contribution. Now, you can see here the salary that was given to this person, the net salary is 18,990, but that's not the only amount you're going to adjust. You're going to also consider the employer contribution and also the pay as you earn, because that's the net salary. It's the amount that has been paid to him. But remember, the employer, by law, you have to deduct the pay as you earn. But it's his salary he paid you, but he's just paying on your behalf to SARS, because you also need to pay tax so that you can be a responsible citizen. Okay? Now, as you can see, you come here, it says here now, the salaries of 480,000 plus the 26,990. Now, let me show you how I calculate that. Then I'm going to say, my salary was net salary plus pay as you earn plus the pension, which the employer have paid, which is going to be 18,990 plus the 4,200 plus 3,800. How much this person earned is 26,990. Here, the reason why I'm doing this is because I wanted to split the employer. Remember, the employer contribution is also part of salary, but I'll show it separately. Hence, I'm doing what I'm doing here. When I'm answering the question, then it means it's also the employee contribution, because he took it from his salary that already been provided. It means the total salary, excluding the employer contribution, was how much? Was 8,990, which is your net salary, plus the 4,200 plus the 3,800, which is going to be, which was the patient that you as employee have paid. But I still have the employer contribution for patient, which is still also an expense. Then it means I'm going to show it separately. Okay. Now, hence, if you go to the solution here, you can see I went to say salaries only. It's going to be 480 plus that 26,900, excluding what the employer, because I'm going to have a separate line item called employer contribution, which is going to be shown separately, which is now 91,850. Then the 5,850, where did I determine that? It's based on the information provided. This 5,850, the employer contribution, because it's also an expense, even though it's paid to maybe to your patient, which is your patient here on behalf of the employer, but it's also part of what you are earning. Hence, I'm showing it as a separate line item called employer contribution. Okay, I hope it makes sense what is happening here. You understand how to do the income statement. Okay, there's also another thing that I need to show you also with regard to this question, especially the calculation. Okay, now there was also other things that have been provided for, things like your interest, things like your depreciation. There's some, remember, as I showed you earlier, I'm given accumulated depreciation, but we know that depreciation is an expense. I need to show it in your income because my question is about income statement, but I'm given enough information to do that. Now let's start with the interest first. Now here, the loan statement, it's provided from this big bank reflected the following. There was a balance of 810. There was a repayment including interest, and also the balance on 30 June. But I need to determine what was my interest or loan bill. You can see that the certain question mark. Then I know if I said my opening minus my closing balance, because I started with 810 and now minus your 450,000. That's going to be the amount that you have paid. And then now there was also a repayment, which is including the interest of 280,000. Then now, if you were to do the calculation to determine your interest, because the interest is unknown, what would you do? You say, I just want to show you in my wiki so that what we're supposed to do. You're going to say, okay, your interest is opening balance plus interest minus repayments is equals to closing balance. But now the interest is not known, but the repayment was provided, the opening balance was provided, the closing balance. Therefore, it will be easy to determine the unknown. Then when I start doing my calculation, I said my capital repaid is opening minus closing balance, which is 360, and the repayment, which was provided as 280,000. Then I'm going to say my interest now, the difference between this amount, 360 and 380, is going to give you my interest. Then that was easy if you understand the formula. It's opening balance plus interest minus repayments. But I've been told that my repayment also include what? Also include interest. And then it's easy to calculate the unknown, so that using that formula. As long as you understand the formula, it's opening balance plus interest minus repayment is going to give you closing balance. But I'm given my closing balance, I'm also given my opening balance, and I was also given the repayment. But the issue here is the repayment include also the interest. Okay. Now, with regards to depreciation, I'm also provided enough information to determine depreciation. Then if you go to the task itself, you have been told that the vehicle is calculated as follows. Is vehicle, which is 20% per annum on cost, while the equipment is using diminishing balance. Then you need to understand what is the difference between diminishing balance and straight line. Okay. Now, I've been also told that the new computer costing that was repurchased on that day, no entry has been made. A vehicle costing this was sold to a debtor, and then which is the name called Michael's, for 30,000 on 30 December. The accumulated depreciation on the old van was 80,000. Okay. But what is important here is to see how do you calculate depreciation when it comes to equipment. It's diminishing method. It means you use the carrying amount to determine. It means you're going to say your cost minus accumulated depreciation. You factor in your 15%, which is provided. But while you are on vehicle, it's on cost. It means you don't use the carrying amount, you use the cost. Then now you can see, now you look at the vehicle, how much values on vehicle based on the information provided. Remember, vehicle, you are using the cost. Now if you go to the information here, you are provided 940,000 cost, and then equipment is 610. That is the cost. But when it comes to equipment, is diminishing method, then it means I need to say cost minus accumulated depreciation. But when I determine the depreciation on vehicle, I just going to say the cost, which is 940 multiplied by 20%, while for the equipment is 15%, but using the diminishing method. Diminishing method, as I said earlier, is about cost minus accumulated depreciation. I hope you understand, okay? But you also need to factor in anything that has been sold during the year, because, and also the new acquisition that might have happened. But you have enough information for you to calculate that, so that you can determine whether I must first do any adjustment. Based on the information provided here, there was information here, you have been told that equipment, there was a new equipment, which is a computer that was purchased on 1 April 2021. Therefore, it means you are 940 and no entry has been made. Now it's a new information. It means I need to go and say my 940, whatever it was, on the equipment, and then remember you factor in your diminishing method. Then I'll do this 32,000 separately. Then you can see, let me show you how I've factored in with regards to equipment. I'll say I'm going to the only equipment so that you can see how I've done my calculation. I'll say on equipment, I want to go to equipment, diminishing method with an April addition. Then I'm going to say 900, and I was given the equipment cost as 610, which with a depreciation of accumulated depreciation of 262,000. Therefore, I've got the carrying amount of 348,000 using the diminishing method. Then I'll go to say 348,000 excluding the new equipment. Remember, I use the 15%, sorry. I'm going to say 348,000 multiplied by 15%. I get that 52,200. And then on the new computer, I also do the same. I said the new computer, because it's not yet accounted for, I do the separate calculation, which is 15% straight on the cost, because I'm not yet determined the previous depreciation, because the new computer, which is now only for 3 months. You see the calculation there. The total depreciation for the equipment now is going to be 52,200 plus 1,200. Okay, I hope that you understand now that the additional information is very important in calculating but the important thing here is to understand the formula. There's a diminishing is after taking out the accumulated depreciation, while when you determine the vehicle, we're going to say only the cost without filtering in what the depreciation. Okay, students, I hope you understand. You can see now vehicle, we use the cost, we are not deducting any accumulated depreciation. I'm just saying my cost is 940 multiplied by 20%, but I need to factor in what has been sold, because 120,000 which was included on 940 was been sold already. Then I must make adjustment. Then I'm going to say on that one, it's only for 6 months depreciation, but the balance of 940 minus 120 is for the full year, which is 20% multiplied by 12 divided by 12. Then that's how I calculate my vehicle. Students, I hope you understand how to do the calculation, and I want to wish you all the best in the remaining year. When you do all the questions, because the more you practice, accounting is about practicing, and then at the end of the day, you're going to make it. Then in answering this question, what was important, if you can recap, is to also understand the structure. Remember, I said earlier, the structure is sales minus cost of sales, gross profit, and you consider all other operating income, and also you don't forget things like bad debts recovered, also all the profit that can be there. And also, as long as you understand the line items of the income statement, it's only thing that goes to income statement, like salaries, employer contribution, things like your bad debts, all the expense also must come into here to determine your net profit for the year. Okay, then students, all I can say for now is to say understand the structure of the income statement. How to determine your net profit is very important. If you know what are the items goes to the income statement, then it becomes easier on doing the calculation. Then the only thing that I can say to you students is, as you are now left with few weeks to start writing your exam, I wish you well in the coming exam. I thank you.